So within the next few months, we are about to witness the most absurd IPO in pretty much ever. Obviously, we're talking about the SpaceX IPO. If you're not caught up with this situation, SpaceX is looking to make their debut in the public markets by mid-June of this year, aiming to raise roughly $30 billion at a $1.5 trillion valuation. And if that wasn't a big enough headline, their $250 billion acquisition of xAI announced in early February means assets like Grok and Twitter are slated to be brought into the public markets. Now, at this absolutely ridiculous valuation, SpaceX would instantly become the 11th largest company in the world by market cap, and would be the second largest IPO in history, only behind Saudi Aramco back in 2019. Third place doesn't even come close to either of these companies. So this should give you an idea of how significant an IPO the size of SpaceX could be for the stock market. But while the valuations for both of these companies look similar at face value, the paths they took to their IPO price are extremely different. You see, Saudi Aramco is considered a national oil company that is primarily owned by the Saudi state. And even though the oil sector typically experiences much slower growth than the many verticals that SpaceX is in, Saudi Aramco has had nearly 100 years to mature into the multi-trillion-dollar corporation that it is today. But comparing that to SpaceX, bro, the GameCube is older than this company. And in 2015, they were raising cash at a $10 billion valuation, which is less than 1% of what they're valued at going into June. So a company that has run up to this extent going into its IPO is completely unheard of. And while a 125x in 11 years is absolutely ridiculous, 90% of that growth occurred in just the last 3 years. In 2023, SpaceX was raising capital at a valuation of around $150 billion. So if the IPO price holds as is, this company will have 10x'd in only 3 years, at least on paper. For reference, the S&P 500, the index that tracks the 500 largest American companies, returns a long-term average of around 8 to 9% annually. SpaceX, on the other end, has been growing 115% per year since 2023. Now I know what you're thinking. Damn, I should have been putting money into SpaceX, just like I should have been buying properties in 2008 instead of being in elementary school, learning shapes and all that useless stuff. Well, I have good news for you. Even if you wanted to, you couldn't. No, not you. You should have been on the grind. But as for SpaceX, unless you were an institutional investor with billions of dollars at your disposal, you had pretty much no way to participate in this generational run-up. That is, until now. So the question on the investing world's mind leading up into this IPO is SpaceX really worth $1.5 trillion? Well, in order to get a better understanding of this company, I've broken down SpaceX into 3 main business segments. So let's start out with the largest of the bunch, which is, well, SpaceX. Seriously, dude, they might need to take the meta route and come up with a parent company name before this gets too confusing. And I swear to God, if you call it If we were to look over the business model of SpaceX, the undisputed cash cow at the moment is Starlink, the satellite-based internet service. Unlike other internet providers who mainly rely on grounded infrastructure to power their networks, Starlink has a fleet of thousands of satellites in low Earth orbit, offering high-speed internet to pretty much anywhere imaginable. Like, you can be in the most isolated part of the world, and if you have Starlink, you can be grinding social media as if you were at home. So yeah, Starlink is a really cool service, and I can definitely see its utility becoming mass adopted over the coming years. Currently, Starlink brings in an estimated $16 billion of revenue per year, and is the primary reason why SpaceX is profitable. So when this company eventually goes public, it will be very interesting to see exactly how fast Starlink is growing. And you also have the fact that Starlink is miles ahead of their competitors, with nearly 10,000 active satellites in orbit. Compare that to their next biggest competitor, Amazon Leo, who has only 212 in orbit. So yeah, Starlink is currently the undisputed GOAT in their field. And considering just how massive these established service providers are, even a slight disruption could be a huge gain for SpaceX. But Starlink needs a way to get their satellites into orbit in order to come online, Which brings us into the part of the company that most people know SpaceX for, their launch services. SpaceX is by far the dominant leader in orbital launches, being the manufacturer and operator of the most frequently used booster of the present day, Falcon 9. They've launched this specific model a record 165 times in 2025, with its current primary use being to send Starlink satellites into orbit. They also have a secondary business where they offer slots within boosters for other companies and government agencies to send their own spacecrafts into orbit. And the fact that SpaceX has consistently been able to land and reuse their boosters makes the overall operation increasingly economical. And also, another booster model that SpaceX is planning to use a ton in the coming years is Starship, which is currently in testing and expected to be used for the upcoming missions to set up bases on the Moon and Mars. I recommend checking out these videos by Space Race and TechMap if you want to learn more about that. But when we look at the competitors in the orbital launch space, SpaceX makes them look like complete scrubs. For instance, Rocket Lab, a near $40 billion company, completed 21 launches in 2025. And Blue Origin, the Jeff Bezos-owned company, did 11. 9 of which were just sending people up into space for a few minutes. So yeah, SpaceX has certainly put a lot of distance between themselves and their competition. And they've always been a pretty diversified business with several streams of solid revenue. However, as of early February, they're looking to expand their operations, starting with... Man, Twitter making its return to the stock market was not on my 2026 bingo card. You know, I don't feel that it's necessary to explain the concept of Twitter to you, nor do I think I can. But this company sure has gone through turbulent times since it was bought out by Elon back in 2022. Twitter was sold for $44 billion, with a combination of Elon's capital, around $13 billion of debt leveraged against Twitter, and a mix of nearly 100 co-investors, like Larry Ellison, P. Diddy, Bill Ackman, and several sovereign wealth funds. Almost immediately after becoming owner and CEO, Elon cleaned house, firing top executives as well as half the workforce. On top of that, many employees just straight up resigned. So after all the layoffs and resignations, the company went from 7,500 employees down to just 1,500. Which included the vast majority of the trust and safety teams responsible for moderating content. Mix that with the genius idea of turning their coveted verification badge into a paid subscription, surely this would result in a functional and honest business model. Right? Well, it turns out when you give anyone the ability to impersonate multi-billion-dollar corporations for the low price of $8, it will turn out exactly how you would expect. Now, Eli Lilly stock dropped around 4% that day, and I can't confirm if this tweet was the entire reason for the sell-off, but I like to think that it was. Obviously, this issue was realized and promptly fixed, but Twitter now had another problem on their hands, which was the advertiser exodus. Since Twitter was now a less moderated space, a lot of content that would have been immediately removed was being shown as if it was just your everyday slop. Companies advertising on the platform like Disney, Apple, and Warner Bros. Noticed that their ads were being shown alongside some abrasive content, to put it lightly. And as a result, they pulled their ads from the platform and essentially told Elon to either moderate the platform better or they would take their business elsewhere. And Elon, being the humble and non-impulsive guy that he is, had this to say to the advertisers as the situation was playing out.
If somebody's going to try to blackmail me with advertising, blackmail me with money, go fuck yourself. But
that was really bad.
Now, this moment was certainly a factor in Twitter's advertising revenue dropping nearly 50% in their first full year of new ownership. But somehow, Twitter was able to survive as a standalone business until 2025, when they were acquired at an implied equity valuation of $33 billion by... So XAI is actually a very new company, only being 3 years old. You can think of them as the AI lab and infrastructure segment of the greater Elon sphere. You'll probably recognize XAI for being the developers of Grok, the famed fact checker of Twitter. They also run the largest data center in the world by computing capacity, Colossus. It has a 2 gigawatt capacity and houses over 500,000 NVIDIA GPUs. On top of that, Elon has made it quite clear that the next step for xAI's infrastructure build-out is to send data centers into space, with the intention of making them operate purely from solar power. This is significant since one of the main concerns with the massive data center build-out we're seeing across the biggest companies in the world has to do with their energy consumption. Like seriously, these things guzzle energy like a Jeep Wrangler. And there's just a lot of worries that our current energy grid is not going to be able to handle such a massive inflow of exponential demand. So if xAI is able to prove that sending data centers into space is economically viable and provides a constant and sustainable source of energy, it has the potential to completely shift the way these companies strategize their infrastructure build-out. This could be the reason why the decision was made to merge xAI with SpaceX, combining the company that is more capable of bringing things into space than any other in the world, with a company that potentially stands to gain a ton by building out their infrastructure in space, could be a winning move. And throw Twitter in there too, why not? But I'm not going to sit here and say that this is a sure shot for success. Elon's narratives certainly thrive around bold predictions, which go unrealized more often than not. And mix that with the fact that xAI burns cash at a ridiculous rate. What I'm trying to say is that while there's a ton of potential for the greater company, there's certainly still a lot for them to prove. And because of that, I'm not even going to try to predict how all these businesses are going to coexist under one roof, as my guess is as good as his. But we can look at how a company like this going public can impact the broader market. One of the ways it can do that is through the S&P 500. The S&P 500's allocation distribution is weighted by market cap. So the larger a company is, the more weight it has within the index. And since SpaceX would instantly become one of the largest companies in the stock market at a $1.5 trillion valuation, the weighting structure within the S&P 500 would shift to accommodate this change. And at current levels, SpaceX would make up roughly 2 to 2.5% of the index, which means for the passive funds tracking the index like VOO and SPY, they would have to redistribute funds invested in the rest of their holdings to accurately weigh the new index. Now, in theory, this would structurally cause downward pressure for every other existing company within the index. And since there's roughly $13 trillion being passively tracked through the S&P 500 as of 2024, even a marginal redistribution could equate to hundreds of billions of dollars of trading volume. And since Saudi Aramco is not an American company and has never been listed in the S&P 500, we can't really say for certain what happens when a company of this size just spawns into the top 10 of the most prominent index in the world. And yet another potential headline for this IPO is the possibility that we see the world's first trillionaire. At the time of this recording, Elon is currently at an $845 billion net worth, with around a 40% stake in SpaceX. So if we see SpaceX shoot up big into the green as it enters the public market, there's a non-zero chance that Elon becomes the world's first trillionaire as a result of this IPO. It's been over 100 years since the world saw its first billionaire, so this would be a very historic moment if SpaceX were to be the catalyst. So yeah, there's quite a lot riding on this IPO. I mean, the only other IPO story with a comparable run-up to SpaceX is OpenAI, who's also slated to IPO this year at a $1 trillion valuation. Maybe I gotta make a video going over them next. But if I had to predict, 2026 will certainly be remembered in the financial space as the year of IPOs. And like I said, it is truly anyone's guess for how this SpaceX IPO is gonna play out. This could end up being a massive win for the Elon bros, or it could just be another Figma situation. Who knows? Either way, this should be a very fun one to watch, as 13-figure IPOs do not come around often. Or, at least, they didn't used to. Well, all I've left to say is, sit back and enjoy the turbulence. See you in the next one.